Good morning, everyone. My name is Liam McMahon. It's Thursday, December 26th. Happy Boxing Day to our UK, Canadian, and Australian friends. Thank you very much for watching. This is a video morning digest because it's the holidays. You can see my little Santa Claus here in the corner, and because I didn't want to type things today. So I'm just going to run through some of what we saw while markets were closed for the holiday and talk about what's going on here for now till the end of the year. So please look over the risk disclaimer, which is now on your screen, and then we'll jump into it. Okay. All right, so this is KiwiCAD. We'll get there in a second. Let's run through the indices real quick. Nikkei, all right, up. This is Nikkei futures. They're up over 2%, trading at 16,315. All right, you can see we moved higher, much higher here during the holidays. Gapped up above that 16,000 figure, first time I think in 6 years. That is now major support. That 16.2 to 1600 range is a decent support range. It's looks a little overcooked here, but it's still worth. I think it still looks extraordinarily bullish. To me, the Nikkei is one of the more bullish indices out there, especially now that we've cleared the 16,000 range, which caused this reaction down here. This is not, so my usual take is that Head and Shoulders patterns mark tops and bottoms, but I have been seeing more and more of these sort of inverse Head and Shoulders continuations and Head and Shoulders continuations. There's a couple of them on Aussie dollar as well, the reverse. And this is just worth noting that this played out very well and it's continuing to the upside. So watch the Nikkei. May digest for a couple days here with more holidays coming up, but as long as we're above 16K, things look pretty rosy here for the Nikkei. E-minis, all right, opened up to brand new highs. They're continuing their breakout from last week. There's really no evidence other than the fact that, RSI is at 76. It actually was as high as 78 earlier today. There's nothing to really suggest that E-minis and the S&P 500 are going to slow down anytime soon. I think they will, and I think we'll eventually see a fairly decent sell-off here in 2014, but right now there's no technical indication that that's going to be the case, so it's hard to really short here at all-time highs with no real setup. So just continuing to watch the march higher. As far as Europe, Europe's green as well. What's open? Not all of Europe is open today, if I'm not mistaken. So there are some holidays going on out there, but I think the DAX is closed, for example. But the FTSE is up about 0.25%, so that's just continuing the march higher. Yen pairs, okay, the big movers over the holiday. You can see dollar yen trading above 104.50. All right, 104.74, making new highs, touched 104.80, started to pull back a little bit as these pairs just continue to march higher. Okay, we're above that top of that channel here, so there's really, again, similar to E-minis, no real shorting opportunities here other than a gap fill play, which I'm not super keen on doing. Pound yen, all right, broke out really just extraordinarily well. I've been watching this bull flag for quite some time and talking about it for quite some time. And of course, it makes its move over the holidays and we can't actively trade it. But it's continuing to push to new highs as we speak, touching 172.11. This measured move takes us to 174. I would expect us to get there. All right, so pound yen looks very good. CAD yen broke out above. All right. This one might actually be worth a long on a retest here around 98.30 or so. But the real entries were down here as we're starting to break out above the top line of this channel. It gets a little bit dicey as to how you want to trade it. Kiwi yen. Okay, Kiwi yen not doing so great here, way down by Kiwi dollar and Aussie dollar both gapping lower. Let's take a look at some of the dollar pairs right now. Okay, you can see Kiwi dollar starting to push here below, all right, after this breakout. That takes us to where I saw on Kiwi CAD. All right, another fairly clean breakout. Looks to be following Kiwi dollar lower. This one is a fairly attractive one for shorts. Aussie CAD is not at support right now. And then Aussie dollar also gapping lower. This inverse head and shoulders pattern is still intact. We've got about 2 days all right, to finish this right shoulder for it to be a symmetrical head and shoulders pattern, maybe even more like a day and a half, I think. So it needs to really kind of get on its horse and get back up here. Of course, it's nothing until this neckline breaks, so just have to kind of keep an eye on it. This neckline corresponds nicely with the 50 EMA, so if we do manage to get above, say, 89.50, it's a pretty decent setup for a possible squeeze a little bit higher. This trend line, though, stands really as the major resistance for the pair. As long as we're below this trend line, medium term, long term seems really to be a short bias. All right, everyone's favorite pair, euro dollar. Okay, just chopping here. Holding down pretty well after the FOMC spike lower. All right, it hasn't really completely fallen out. The bottom hasn't fallen out, but it's really kind of being held in a pretty contained consolidation. So still watching this one. It looks better for shorts than longs, but I'm not super keen really on either side of this trade. 136.52 is the major support level. Pound dollar squeezed higher. All right, overnight picked up some stops, is pushing higher. 165 stands as the next major resistance for this pair. Euro pound, that means with the euro and pound diverging, euro pound is pressing into its support. Still looking for a move down towards 82.50. Needs to clear these previous lows here, and then we could actually see a fairly aggressive move lower for the pair. Euro yen, all right, another gap higher. Still trading within this channel. This has been a very stubborn channel. It's not going anywhere. This is one of the yen pairs, though, that you'd want to keep an eye on for a possible short. Not because I think it's a short now, but because it does, you can see a pattern, all right, that makes me think we may see a short opportunity. If we break this channel, it may be worth taking a stab. You can also see the just insane divergence that we have going on here on euro yen. So that's definitely a yen pair to keep your eye on. Aussie yen's another one. All right, this one, if we do see some Aussie dollar ignition to the upside, Aussie yen is a very good opportunity, I think, to play that. If we manage to clear that trend line, all right, which is about 93.75 or so right now. What else do we got? Let's take a look at gold. I haven't seen what gold did. Gold, all right, getting a little bit on its horse here off of these, just shy of these 1179 lows. You can see we're up 0.8% right now. First major resistance, all right, is 1220. That's actually really the significant resistance. 1220 is a big level. If we do manage to break back above this trend line, we could start to see some gold shorts cover and a small correction to the upside. Crude, still consolidating here after its range break, still looking for just a move to just over 100, and then from there we'll have to see on crude. So we got a couple minutes. Oops, sorry. This is the VIX. Okay, a little bit, some bullish mumblings here, but generally not that exciting. Treasury notes, okay, yield notes are down, which means yields are spiking higher. This was fun. No idea what that was about, and that's not a chart error. That actually happened. So hooray, high frequency trading. 30-year, all right, pushing down in the 128 range, so yields again increasing a little bit, which is dollar bullish, would explain a little bit of this dollar yen move. Combine that with what the Nikkei is doing, and that's what you get on the yen pairs. All right, this is, that's actually not helpful. Let me show you the other version of that. Hey, this is XLF Financial ETF. It is constructive here. All right, some little bit gappy, but getting one gap fill. We'll see if we can push higher today. Some stocks that you may be interested in while I'm here. Google trading well on the channel, but showing significant divergence. Apple digesting its gap, all right, after the China Mobile deal. If we do see a dip here, All right, and Apple, 550 is a very, very attractive buying opportunity. All right, so that's if you trade U.S. stocks, Apple's one at 550 that I would keep on your radar. All right, so that's your morning digest for today. Thank you very much for watching. Remember, open today and tomorrow, and then next week again with the holiday, things get a little bit complicated. So low volatility, low volumes, but should be fun anyway. So enjoy your trading this weekend. Happy New Year.